Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 16th of June 2016, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead and also a trading plan for today's US session, and as we go into Friday's session as well. The live session we'll be covering an overview of the commodity markets. We'll cover our top trades of the week, live market commentary, trading ideas for the week ahead, as well as answering any questions you might have throughout today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking Finance Review, the Wall Street Journal, and of course, it's a pleasure to be here today sharing our content with everybody on FX Street. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldandsilverclub.com. Right, so we've got a lot of content to share with you over the course of today's session. I'm sure a lot of you are aware of the moves that we've seen in the markets over the course of this week, from equities to Forex to the commodity space. So what we want to do is we want to go through that in the lead up to next week's EU referendum and also the Brexit vote, which is occurring, of course, next Thursday. And with that, we're going to go through a bit of a trading plan. I want to show you some research on this, some data, what we can look at moving forward, what trading opportunities are available at this point in time. So first of all, you want to be aware that there's a very strong correlation at the moment, as you've probably seen, with the gold price currently sitting at $1,305 per ounce. The correlation between a potential exit for the UK to leave the EU and gold price is very strong at the moment. Over the last week, we've seen an increase in the polls for a potential leave vote. With that, we've seen volatility increase. The VIX index, which measures fear in the markets, has significantly increased to the upside. That has also had a strong correlation with gold, which is broken out to 18-month highs now. And we're seeing a lot of increased fear in the market. We've seen global equities start to roll over and break down over the last week. And we've seen another breakout here on gold. We had the FOMC statement yesterday, which confirmed that essentially the Federal Reserve are not going to go ahead with any changes to their interest rate at this point in time. So that was left unchanged, and that has caused an additional breakout to the upside overnight for gold here. Now, gold is currently trading at 18-month highs. I've already seen some questions in the chat which are relating to where next. Should you buy gold at the moment? What should you do at the moment in terms of positioning yourselves for the metals? And that's certainly something I want to go with you through on today's session. As always, keep the questions coming. Any comments, any feedback, any comments at all throughout the session, do put those into the chat. Your contribution is definitely valued. So if we look at gold at the moment, gold is currently trading at 18-month highs on fears regarding the referendum next Thursday as to whether the UK will come out of the European Union. So hedge funds have increased their net long positions now on gold by 20%. We've seen that increase to 186,000 lots now, pushing prices to 18-month highs on Brexit fears, fading expectations for a Federal Reserve rate hike, which we had confirmed just yesterday, has also driven the price higher. And gold is now sitting up 21% year to date. And you can see hedge funds, institutions, they're continuing to add to their net gold positions. We've also seen a big increase in terms of managed money going into silver as well. So silver net long positions at this point in time sit at record highs. Now, we at the Gold and Silver Club continue to have long positions, longer term trades on both gold and silver, which have benefited from a lot of the moves we've seen over the last week and a half here. We've seen some tremendous breakouts. We've seen gold yet again breaking out to 2016 highs and 18-month highs here as well. And silver is now up 24% year to date. So silver, the amount of net long positions for the buy side right now, there are all-time record highs. So what does that mean in terms of the metals? Well, it means right now you don't want to sell these markets. You don't want to sell short into the precious metals. Any major news announcements at the moment regarding the Brexit vote next Thursday are causing gold and silver to spike. We're seeing the fear trade on at the moment. So we're seeing a move into a risk-off environment. We've seen global equities break down. Oil is breaking down at the moment, and we're seeing big inflows into the safe havens. The US dollar, we're seeing big inflows into gold, into silver, and we've continued to see that right into the US session this afternoon. So we're continuing to see a move to the upside. Now, in terms of the lead up to the referendum next week, you can see the FTSE 100. We've wiped off over 100 billion in terms of the overall positions here on the UK FTSE at the moment, UK equity market over the last 4 days here. So there's been a significant pullback on the FTSE. The UK stock market has hit a new 3-month low on the back of heavy sell-offs here, resulting in that 100 billion being wiped off the value of Britain's biggest companies in the last 4 days. So similar sell-offs have now occurred across Asia, European and US equity markets, which I'm sure a lot of you are aware of. So it's this fear in the market right now. In fact, I will bring this up for you just to put this in context right now. This is the VIX. This is the volatility index, and this measures fear in the market. And now we've seen an increase, certainly over the last week, in fear. And this has had a very direct correlation with the shift in sentiment over the last week, with the Leave camp now going ahead of the Remain camp in terms of the Brexit vote next Thursday. And this has caused the VIX, the volatility index, to increase. The pound has broken down to an 8-week low. We've seen outflows of equities here, and with increased volatility, that provides fear is good essentially for gold, silver, for the metals, for the US dollar index. And we've seen some good trading opportunities on those markets. So this is absolutely an indicator that you want to have a look at. You want to be aware of the VIX right now, where volatility is sat. Essentially, at the beginning of the year, when we saw a terrible start for equities, the volatility index got up to the 26 level, which you can see just marked on my chart here. This was the double top here, the double low, which actually formed in a lot of equities as well, especially US equities, the Dow Jones, S&P 500. This is where we formed a double low in those markets, which coincided with an inverse correlation of the volatility index. So this measures, most important point, this measures fear in the market. When fear goes up, traders, they go for the safe havens. We see a bigger play towards gold, towards silver, towards the US dollar index, and we see outflows of equities, which is essentially what we're seeing at the moment. And that's been very relevant to the recent price action. The lead up to the referendum next week, the British pound has now hit 8-week lows here. So the pound has fallen to 8-week lows against the dollar and a 3-year low against the yen, as investors are seeking the safe haven. So our research shows us net short positions, so capital outflows from the British pound, are currently at their highest on record since 2013, which I'm sure for those of you who do trade the British pound are very aware of at the moment. So we've continued to see significant outflows, and with that there is a lot of fear, and it's justified. Uncertainty breeds fear. That's probably one of the worst market conditions for traders, is uncertainty. So when there's uncertainty in the market, traders, naturally, there's more fear in the market, produces a risk-off environment, and they're less likely to take on risk, and therefore we see more selling and a move towards safe havens. And this is, the fear is justified, because this is what happened when the Swiss National Bank abandoned its peg to the euro. This was a huge move. I'm sure for those of you who are aware of this move or were trading at that point in time, unprecedented move that we saw, which caused a lot of brokers actually to go out of business on this move, which I'm sure a lot of you are aware of when we saw this huge move in the market. So the fear is justified. Also, when the ECB, they cut their interest rate, the euro collapsed to a 12-year low. So again, if the UK was to come out of the European Union next Thursday, it's an unprecedented move, and there's a lot of uncertainty around that, not just for that move, but of course the following 2 years after that as well. And that is what is causing a lot of volatility in the markets right now. And with that, what has been the beneficiary of that has been commodities. So we've seen big inflows into the agriculture markets, into softs, into grains, into base metals, into precious metals. So if you're wondering, which I'm sure a lot of you are aware of, but if you're wondering where the capital is moving to, it's moving into commodities. It's moving into the agricultural markets. Hedge funds have sold equities at record pace, and they've moved into softs and grains. So it's no surprise now we've seen a lot of the agriculture markets in the region of up over 30% year to date at the moment. Softs and grains, they're trading still 60% below their 2011 peaks. There's a lot more upside on these markets, positioning for a potential explosive move in the months to come here. Soft commodities, they've rallied strongly this year, posting gains of 30% year to date. Growing global populations, concerns over supply, they're all driving prices to the highest level since 2013. You only need to look at markets like sugar, soybeans, corn at the moment. Runaway moves so far this year. We're continuing to see that shift from capital moving away from equities, moving from currencies, the riskier currencies, and we're seeing it move into softs and grains, which are officially now back into a bull market. So I just wanted to give you a bit of context there before we go into some technical analysis. We've had so many questions. It's been such a busy week for us at the Gold and Silver Club, as I'm sure you can imagine with the moves that we've seen. Gold, of course, has just broken out to 18-month highs. So it's been a busy one. It's been a very busy one. So I'm welcome to take all of your questions, guys. As always, your contributions are extremely valued. So we'll definitely go through. If you've got any additional questions as we go through analysis, do keep those coming in the chat there as well. Okay, so with that, let's just move over and have a look. Hi there, Raymond. Let's just move over and have a look at gold. So gold right now, let me just explain something for, this might be a refresher for some of you, but just to be clear on the overall price structure that we've got at the moment on gold and how we've got here really over the last month. So gold going back to April, we had a runaway move back up to the highs here. So at that point, gold was sitting in the region of up 20% year to date. So that was back at the end of April. However, we saw this correction over the course of May. And one of the catalysts for that correction was in mid-May, the minutes from the FOMC, Federal Reserve, they stated that they were in a position based on US data to go ahead with an interest rate hike as soon as potentially the June FOMC statement, which was yesterday. Okay, so with that, we saw significant inflows back into the US dollar. The US dollar spiked. So here's the US dollar. This is the move that we got on the US dollar, the breakout. You see the follow through that we had following on from that. And Janet Yellen went on to deliver several speeches where she confirmed the sentiment that the Federal Reserve were ready to go ahead with an interest rate hike as soon as the June FOMC meeting and statement. So with that, we saw a 1,000-point correction on gold. Okay, so that was a $100 move there from 1,300s down to the 1,200 level. However, we held around that 1,200 level, which happens to be the 38.2 Fibonacci retracement level. So that did hold, and at that level, we consolidated until the Friday's non-farm payroll at the beginning of June. And at that point in time, the Federal Reserve, if the data from non-farm payrolls had been strong enough, it put them in a good position to go ahead and increase interest rates at yesterday's FOMC statement, or if not that, the July FOMC statement and meeting. However, the non-farm payrolls, so the unemployment figures and the employment data from the USA at the beginning of June were the worst non-farm payroll figures to come out in almost 6 years. And with that, we saw the US dollar essentially tank. It sold off significantly. You see the breakdown here, very significant sell-off, and gold and silver were bid up. And we had quite a significant move back up to the next Fibonacci level, 23.6 retracement, 1242. That was a significant move. So we saw them bid back up, and with that, there was then less likelihood that the Federal Reserve would go ahead with an interest rate hike. And we've now seen over the last week, we've seen sentiment increase with gold. We've seen a shift back into gold for a safe haven bid as well. With the Brexit vote next week, fear in the market has increased, and you've got a classic V-shaped reversal pattern, which is where the market breaks down, it gets overshoots in terms of a sell-off, and that sell-off was exacerbated by the minutes on the FOMC, which caused a surprise in the market. So traders just got out of their gold position. So we saw this further correction. But at this point in time, we've completely rallied back. And now we've broken out from the 2016 highs. And we're back at 18-month highs at the moment for gold. Now, we've had positions on since way back here, since we've broken out from this reversal. We've had a nice trend channel here. I'll go through our portfolio performance, excuse me, very shortly with you. But we've had a breakout from this confirmation level last week where we got a break above the highs from non-farm payroll, and that's continued to follow through and represented a really nice trading opportunity. So that's in the region of about 590 points profit that we're on that trade right now. So the question is, where next for gold? And for those of you who have said, well, you know, should I buy gold at this point? You're probably right. Right now, this is where the retail trader, the speculator, gets into gold, because the headline news is that gold has broken through 1,300. So gold is at an 18-month high. It's the headline news, and you'd be correct in thinking it is getting into an overbought condition, where the investors, the money managers, the hedge funds, they did not get in at the 1,300. They might have added some positions at these levels at this point, but these are the levels on the pullbacks. They've got in on the pullbacks. Look at the huge move that we've had from the 1,200s, the huge move that we've had from the 1,250. So you would be correct in your assumption that right now gold is a little bit overbought. So unless you already have a position on gold, which was around the 1,250 zone or possibly the 1,280 zone, yes, it is quite overbought at the moment. To get in at 1,300 levels is overbought, but you would benefit if you already have a trade, because over the course of the next week, as we move closer to Brexit, we have the potential, especially, of course, if it's an unprecedented move and the UK does move out and it does come out of the European Union, then we could see gold fly, and we could see a move up to the 1,350 level, which is the next major overhead psychological resistance level. That's a key area. So 1,350 could be on the cards here. That is a projected level if we were to see an unprecedented move and we were to see the UK come out of the European Union. Then there's the flip side of that. So obviously, if the UK remains, we're back to the status quo, and at that point, gold is quite overbought. The short-term trade, which has been based on fear at the moment, will be overdone. And yes, at that point in time, I would expect gold to potentially correct itself, pull back, but it has entered into a bull market this year. Pullbacks to be treated as buying opportunities, but you also want to make sure you're buying at a relevant price. You don't want to get caught out buying at 1,300 and then have to go through 1,000-point retrace or $100 correction in the market. So yes, timing is everything at the moment with the metals. And just going back to some of the questions in the comments there, you would be correct in stating that 1,300s at this level, buying at this point, it is more challenging for you to get a good risk to reward, to have your stop loss in a correct place. But at the same time, you don't want to be shorting gold at this point in time. Really, the best move here is if you're already in a swing trade or a longer term trade, there's more upside potential at the moment for gold. But there are trading opportunities around the corner, which I'll go through. Now, silver, we continue to maintain our silver position at the moment. So we've still got our silver trade on. We've continued to ride this. So this was actually a nice breakout trade as well. Following on, we saw more upside potential on this trade actually than gold as well for a swing trade. We remain in both positions, but silver has been really a good trade here. And you can see it's not far from $18 per ounce. And typically what silver does is silver at this point in time is lagging behind gold. What happened in the first quarter this year, gold closed the first quarter up 16%. Silver was lagging behind. Then silver made up for it in April, rallying over 14%. So it looks like silver is just going to lag. Once it breaks through $18 per ounce, buy orders above that level, it's likely to follow through more as well. So that's the key level we're looking at next. Again, to get into a fresh position at $18 per ounce, your risk to reward is off. The buying opportunity was back here, as you can note, where we had from the close of last week. We saw net long positions on silver at all-time record highs around these levels on this pullback. So around 1600 to 1650. That was the ideal time to buy, not the $18 per ounce level. Again, that's where the speculators come in. That is where the retail traders come in at the incorrect price at the top of this move. Now, there could be some further upside. I do definitely think we're going to get more upside here in the days to come ahead of the Brexit vote. Obviously, we'll see what happens next Thursday. As fear in the market increases, this will get bid up. I would suggest, especially from the FOMC statement yesterday, which confirmed there's no interest rate hike. Also, Janet Yellen confirmed that they're awaiting, obviously, the vote next week as to monetary policy moving forward. So that will have a major impact on global markets, which I'm sure a lot of you are aware of. And the name of the game at the moment is preserving your capital, but also maybe taking advantage of good trading opportunities, but not be too overexposed in certain markets at the moment. Be aware that the US dollar is being bid up at the moment as well. And this is a time where typically the US dollar moves inversely to gold and silver. But during these sort of times where they're both treated as safe havens, because we're seeing a lot of capital flow out of the pound, and also not as much in the euro, but certainly the pound right now, and we're seeing the US dollar being bid back into. So that is likely to also be treated as, well, it is being treated as a safe haven at the moment alongside the precious metals. So you can see actually US dollar looks ripe for a breakout even this afternoon. It's looking good here. Now, some markets I want to put on your radar right now. US oil. Now, US oil, we've already entered into our sell short on this at the beginning of the week. It confirmed for us a number of different factors here led us to enter into a sell short. It's moving well. It's just broken through some key supportive levels. In fact, you can see it's rolling over. You've also got a V-shaped reversal pattern. So you can see here is the V-shaped reversal pattern. We're now just about to break through a neckline here on oil. We've been looking at this trading opportunity for a while now. Overbought to the upside. 52 US dollars per barrel seems to be the high which is in at the moment. Our indicators are showing us that this market is about to turn, roll over. In the near term, I'm looking at about 46 US dollars per barrel. You can see it's broken and closed before below 48 US dollars per barrel. Preference for US oil over UK oil at the moment. It's a more liquid market, the number one most heavily traded commodity in the whole world. So right now, I'm looking for more short-term downside for oil, and I would suggest have that on your radar as well. If you trade oil at this point in time, have a look at this potential to correct further, because the next retracement level there is sitting around 46 US dollars per barrel. So I do like this trade for more downside at the moment, both from a supply and demand point of view at the moment, and also seasonality factors, cycles as well with oil and technicals. Everything is marrying up. If I just show you the weekly chart here, you can see that quite significantly, where we've got a nice rejection candle on the weekly chart for oil at the moment. And in fact, this was the case last year as well. Began the breakdown at the end of June, beginning of July, and this is what happened next. We got that corrective move subsequently over the next 8 weeks here. Oil continued to correct. So it's at a point now where we could start to see a further correction in this market. So I would definitely have oil on your radar. If you trade oil, just be mindful that at the moment it is rolling over, it's breaking down. We're seeing obviously a lot of capital flow out of equities as well. We're seeing a similar price structure there, but I do favor oil at the moment for a selling opportunity here as well. But I totally understand that in terms of risk management on the trade, when to get in, where to put your stop loss, where to put your take profit, that's something you'll need to dig into a little bit deeper. And I'll talk you through that shortly, because as always, there's an opportunity to join us at the Gold and Silver Club if you would like to receive all of our trade updates, the trades that we're taking. We're very transparent about those. We've just come off our live trading room this morning, where we've been going through all our existing positions. We've benefited a lot from the moves that we've had over the course of May and June here on the commodities complex, especially some of the moves that we've had more recently on gold, on silver, on the agricultural markets. Came out of a number of positions last week. We've entered into fresh positions. If you would like to get those positions and you get updated on those trades, join our live trading rooms throughout the week. All you need to do is just go to www.jointhegoldensilverclub.com. But I'll talk you through that a little bit later on in the session. But as it relates to oil, right now we're expecting more downside. Now I would look at also towards the agricultural market. So at the moment, I like the pullback that we've had on wheat. Wheat was overdue a correction following on from the USDA reports on Friday. That was quite bearish. So the US Department of Agriculture produced a report which was bearish for wheat but bullish for corn and also for soybeans as well. So we've seen a correction on wheat, but I do think this correction is getting a bit overdone now. I would look at the next buying opportunity here for this market as well, as we're coming back down to lower end of a trend channel. There's a few supportive zones that we're currently looking at for wheat. So I look at more upside potential for wheat, potential buying opportunity which will produce itself over the next couple of days. Corn as well. Corn has had a pullback. Corn has been a significant mover over the course of 2016, up 17% this year. I would also look at pullbacks as buying opportunities on this market. Corn officially moving into from a bear market to a bull market. And of course, soybeans, runaway move up over 34% year to date since we broke above very key support here back earlier on in the year over March and April. It's been a runaway move on this market, but I would also look at pullbacks to be treated as buying opportunities on the agricultural market. So particularly the grains here, and definitely you also want to just have coffee on your radar as well, because coffee is also building up a nice base here. It's been developing this base for some time. Again, a market we continue to have long positions in coffee as well, and a number of other agricultural commodities. So I do see some good opportunities ahead here. Also got asked a few questions about gold against the euro, and yes, absolutely, gold excuse me, gold against the euro is flying at the moment. So you can see here, gold against the euro overnight, we've now broken out also to the highest level since just over a year now. In fact, we've just about cleared that level now over the course of today's session. So you can see here we're actually just clearing above the highest level since 2013. So 3-year highs here in gold against the euro. So yeah, if you're not making money on these markets, you want to make sure you're positioning yourselves so that you are making money on these markets, because there's some very lucrative trading opportunities ahead. You want to get yourself positioned right for this ahead of the Brexit vote next Thursday. And you really want to make sure you're able to capitalize on this, preserve your capital, but also make sure you're taking advantage of the right opportunities. Asset allocation, very important right now, making sure you're not exposed to the incorrect markets, making sure you've got exposure where you can benefit from what is potentially about to happen here as we go into next week. Either way, we're going to get a lot of volatility. Volatility is ramping up. Fear is ramping up at the moment. So there's going to be opportunities even ahead of next Thursday's Brexit vote anyway. So we're already seeing some big moves on the market. So let me just run through our portfolio performance, trading performance update using our exclusive research-driven strategies at the Gold and Silver Club. So first of all, we've now benefited again from a further surge on gold here. We've got a number of positions on in both swing trades and also longer-term trades on gold. We've come out of one of our positions here after we've hit our profit target, which is just above the 1300 level for 570 points profit here. So that's been, again, a really nice swing trade and a breakout opportunity here over the last couple of weeks. Sugar is continuing to break out to 2016 highs. We also came out of a sugar trade just last week as well for 400-point gain on this market. It was really nice to come back up to the 2016 highs. Again, we hit our profit target, but we continue to have other longer term positions on sugar too, and wheat as well. We've actually completely closed out of our wheat position. That was a 470-point gain. We closed out of that before Friday's USDA report. Now we're looking to get back in to the wheat market. So that's our portfolio performance over the last week. We continue to also ride out a number of other positions in the commodities complex. Now, if you would like access to highly profitable live trading ideas shared with you, ready to implement, rather than, of course, doing all the hard work to find them yourselves, working out all the entry, exit, take profits, doing all the research and so forth, there is an opportunity for you to gain access to everything that we provide at the Gold and Silver Club. So whether you're a new trader, you want to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader, but you can see there's a lot of opportunity in the markets right now that you'd like to get involved in, especially in commodities, to really take your trading to the next level, then I would suggest the private members live trading room. It's definitely for you. So what that includes is, as a member, you get the following: exclusive weekly live trading room webinars. You get live trade recommendations ready to implement. So we share with you our exact entry, exit, our stop loss on each of the trades that we're taking, and additional trade management. You get real-time trade notifications so you don't miss a profitable trade. You get live trade support helping you through each trade, customized technical charts and indicators all set up for you. You get access to our private members academy, so all of our online content as well, so you can watch all of our training videos. You can join us during our live trading rooms throughout the week. You can catch all of the recordings of those as well. You also get a trading plan which is provided to you every single weekend. All of that and exclusive access to our proprietary trading research to give you the ultimate edge in the market. So you can get that very simply. All you need to do to get exclusive access to our private members live trading room is go to www.jointhegoldensilverclub.com. Okay, once you've completed the application form, we'll get in touch with you ASAP. So it's www.jointhegoldensilverclub.com. Also, if you have any questions at all, feel free to contact us at either our UK office, our US office, our Africa office, or our Asia office there. So all the numbers on the screen for you, whichever office is closest to you. But again, if you would like to get exclusive access to our private members live training room, here is the link for you: www.jointhegoldensilverclub.com. Okay, fantastic. So with that, I wish you all good luck, good trading. We are going to be hosting for you all next Thursday. Obviously, we've got the EU referendum is going to be coming up. Well, it's going to be on Thursday. The results should be in by about 10 o'clock in the evening UK time. So we'll be doing a very special webinar with you next Thursday where we'll be going through analysis of the markets. We'll be providing you with a bit of a training ahead of that as well. But again, I would suggest there's going to be a lot of opportunities between now and next Thursday. So in the next week, I can already see a lot of trade setups lining up, and the fear is increasing in the market. So I would really, sooner rather than later, you want to make sure you're able to get involved in some of these trading opportunities. Okay, so with that, I wish you all good luck, good trading. And of course, we'll speak to you all real soon. I look forward to working with those of you who will be joining us at the Gold and Silver Club. Okay, take care, guys. We'll speak to you very soon. Yep, no problem, Raymond. Yeah, just on that, yeah, it's 0207 193 0403. Perfect. Okay, great stuff. Thanks, guys. Take care. Bye-bye.